Entrepreneurial finance, a specialized field, focuses primarily on raising essential financial resources for young, developing companies. To obtain the resources needed to launch their business and support the first years of development, entrepreneurial firms can turn to specific types of investors. Indeed, given the high degree of uncertainty that often characterizes their market, as well as the information asymmetry between the entrepreneur and external parties, investing in this type of business is risky. It therefore requires specific skills and expertise. In addition to relatives, referred to by Anglo-Saxons as love money, who, for emotional reasons, are often the first contributors to young entrepreneurial ventures and various public aid programs, the main sources are equity investors. These can be broadly and effectively divided into three distinct and important categories: traditional venture capital firms, individual business angels, and the general crowd, which can readily participate through various equity-based crowdfunding platforms that facilitate direct investment opportunities for a wider range of individuals. Each of these categories of investors has its own specific characteristics. Venture capital firms are highly structured finance professionals who invest other people's money. In France, these funds are typically raised in the form of mutual investment funds. Business angels, on the other hand, are wealthy individuals who invest their own money. Among them, there is a significant number of former entrepreneurs who seek to share their experience. Finally, the internet has profoundly enabled the significant development of a substantial number of innovative crowdfunding platforms that now allow a much wider audience, specifically the general crowd of individuals, to readily take valuable equity stakes in promising young entrepreneurial firms and nascent businesses. It should be noted that, given their extensive experience, valuable skills, and specific knowledge, some of these players contribute more than just money to young companies. Some business angels, for example, act as true mentors for young entrepreneurs, helping them to refine their strategy. Venture capitalists sometimes play a significant role in the professionalization of management, particularly in terms of human resources and financial management. And some crowdfunding platforms allow for a full-scale concept test before the actual commercialization of an innovative product. However, it should be noted that opening up the capital also raises a number of power-related issues. To anticipate potential conflicts of interest, it is therefore important to clearly define the governance of the young company at the time of the funding round. The entrepreneurial finance market has undergone major changes over the past 2 decades, with the gradual structuring of the business angel segment and the relatively recent emergence of crowdfunding. This critically enables ambitious entrepreneurs to actively pursue complex, highly tailor-made and individualized financing paths that effectively combine various distinct sources of entrepreneurial finance, either simultaneously or in a carefully sequenced manner.